Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into discussing what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar, headline news, or geopolitical, maybe a combination. But sometimes we even get a market sentiment change where now good news is bad news, and that can create confusion among people who are looking at or watching rates and not wondering why rates are doing what they're doing. We try to give those explanations out to you and hopefully give you the information you need to make an informed decision if you're looking to refinance or purchase. If you're in the industry, hopefully this will give you some explanations as well. I'll give you an idea as to where the markets are going and help you to prepare for your business. A little bit about myself is I'm a loan officer. I do work with the national lender, so we do loans in all 50 states. We'd love to be able to earn the opportunity to be able to earn your business if you're looking to refinance or buy. So please give us a shout. But more than that, we'd like to be a resource. We'd like to, if you guys got questions about anything, we'd love to be able to be a resource for you folks and get that information for you. So please feel free to reach out any given time. We'd love to be there for you. Uh, so without further ado, why don't we jump right into it today? We do got only one item here on the economic calendar, and that is the ISM non-manufacturing PMI, or which is the services sector. Anything above 50 is considered expansion. So back in February, we had a 56.5. Forecast is calling for 58.4, and the premiums came in line at 58.3. So services improved in the month of March, which is obviously good news. The big news today is, well, there's a few things going on here, at least with the mortgage-backed securities. But the big thing is comments that were made by Lyle Brainerd. She's the vice chair. She was the one that almost became the Fed chair, but did not quite get enough votes or support to get her into it. But she's the vice chair behind Powell on the Fed, and she's pretty much a dovish person. But she did come out and have and say today, talking about the balance sheet, that we will be seeing that pretty much like we haven't seen before. Basically, they're going to try to unload that as much as they can in a very quick, short amount of time, and the caps will be much different than what we saw through 2017 through 2019. So it'll be interesting to see what happens. These were stuff we kind of knew, but I think she was kind of preparing us for tomorrow's notes that will be released. That will be the big item for this week, the FOMC minutes, and I think she might be just kind of preparing us for that, and the markets reacted very negatively when she came out with that. So to kind of speak, she came out with a rate around just after 7 o'clock, and basically, if you see here, we're up in here until about just after 7, and it just started tanking dramatically here. And after those comments, so she had a huge impact on today's markets here right now, as you can see. Oops, sorry about that. Yeah. So yeah, today we're down about 78 basis points. We were down a bit lower, about 83 basis points, and have subsided some, but not quite. So this is going to have a dramatic effect on the rates today. This is good, definitely around 3/8% to the rate impact. This is like 3/4 of a point in pricing that we would see in our rate sheets. So at no point yesterday would be like 3/4 of a point today, roughly, what this would look like. So stay tuned. Maybe it might get better. Maybe tomorrow. It's hard to really say because tomorrow is the FOMC minutes. We'll have to see if they overly react, or perhaps they feel like they overreacted today and then come back a little bit tomorrow. So uh, hard to say exactly which direction the market's going, but for the most part, we should have had a lot of this built into our pricing coming up, just because we do know that they're going to try to uh, reduce the balance sheet, and we knew they're going to try to do it quickly. Uh, but maybe they just got reminded of that, and that was the bad thing. Now, we have a couple other things that have been going on with it's been kind of negative for bonds. Japan typically is a big buyer of our yields. They had their year end last week and did not. They seem to be more investing in their own. We had Europe, the EU has now went ahead and basically their bond buying program finished, so that one's complete. So they're not really buying. They're not buying bonds right now. So there's going to be a lot of supply out there, and probably not as much demand, especially with inflation as high as it is. There's not going to be a lot of demand for high yields. So what does that mean? Well, rates going to probably, in my opinion, rates are probably going to continue to rise as we go through the year here. So stay tuned. But in any case, here's a take a look at the 10-year Treasury. The 10-year Treasury did spike as well on those comments. It spiked all the way up to about 2.56 right now, or 255. Yeah, 256, 255. Okay, we'll just say 255 for this part if you want to go on there. Now, the good news on this part is it did not change the inverted curve and made it into above. So the 10-year now is greater than that of the 2-year. So the 2 years right now is at 2.50. Now we're up to 2.56. So that inverted curve now kind of wiped itself out. That lasted for about 2 days, basically Friday and Monday. And today, so far, we are higher than that. So obviously, we'll wait until the end of the day. But as of right now, that inverted curve is no longer inverted, as we can see here. Last but not least, we'll touch base on the average rate for conforming loan limits. The 30 years down to or at 4.84, and the 15 years at 4.19 right now. So that's pretty much the wraps for the day. If you guys like these videos, please help us out and smash that like button. But also, if you guys got questions, we are here for you guys. If you guys got questions about anything, please reach out. We are here to answer. So please feel free to, again, ask your questions. You guys have a great rest of your day. Thanks so much for watching, and we'll see you guys in tomorrow's video. Bye-bye.